Hi guys, I welcome you in this wonderful video. So today I just want to share with you something that I believe is gonna improve your trading. So here we are, I'm opening this chart and we can see that okay, the price is moving in an uptrend, but there are some cases where it's really hard to get the flow of the market or to understand where the market is heading and how it is actually changing in terms of strength. I will make an illustration. As you can see here, you can start by looking for opportunities by maybe drawing your trend line. Let's say you just gonna put your trend line all the way down there and you're gonna wait for opportunities from that. But the truth is you will not just be plotting the trend line like this if you have been following the market as it was moving. Now firstly, maybe your trend line could be here. Let's say at the earliest times of this trend, your trend line can be here, and then there will be a point where the market shifts in terms of strength and it becomes a little bit aggressive. Let me not remove it, let me just duplicate it. There will be a time where the market will shift, and then your trend line again is also gonna shift if you are following up with the market. And then all of a sudden there is this interesting thing that's gonna happen. The market is gonna be broken, and when it becomes broken, this is gonna change the way you view the market. Why? Because even if you observe the momentum, let's say you can see here the impulsive wave is a little bit huge, a small corrective, another huge impulsive, a big corrective, and then a small impulsive. So looking at how the market was flowing, it started by trying to change its strength here, and then as it is changing its strength, it then became weaker and weaker. Why? Because you can see through the impulsive waves, they become smaller and smaller, and then all of a sudden a breakout happens, meaning this flow or this kind of change in strength resembled a reversal that was coming. Why? Because in this wave, the sellers were becoming a little bit stronger and stronger, yet the buyers, they were becoming a little bit weaker and weaker because they started strong and then they decreased and decreased, and then all of a sudden the sellers managed to break out, meaning they managed to give us a wave that is completely bigger than their previous wave, not just only their previous wave, but also bigger than the buyer's wave. So how should you look at this market? Because one can say, okay, I will begin to start looking for selling opportunities. However, it is not yet the right time to look for selling opportunities. Why? Because as a trader, you don't have to only base your analysis on trend lines and breakouts only. You don't have to base your analysis from there. So where and how should you base your analysis? Your main the main thing you should be looking for when you're analyzing, the first and the main thing you should be looking for, it is what I always call key levels. Don't just jump in and start analyzing trend as I did. The first thing you have to pay attention into, it is key levels. Those are the levels that are going to tell you if the market is reversing or it is continuing or it is shifting in terms of strength. What am I talking about? For an example, I'll start dropping horizontal lines on the levels that I believe they are very, very important in this price. So I have these three levels that I've indicated. Moreover, you can even indicate this one as an important level. So these levels are the main areas where price is reversed and changed direction or continued direction. For an example, here we have this high, which is very, very significant. Price bounced and then started going up again. It broke this high, meaning it has to give us a new high, which at this point you can argue and say, okay, this was my new high. However, this wasn't that much significant. Why? Because it was just a small corrective and then the market continued again. However, one of the significant areas, it was this area which now triggered you to think that the market is going to reverse. However, if you are triggered that the market is going to reverse here, you have to make sure now that you don't start selling until the market breaks this key level here. Why? Because this is one of the most important levels, because it was the first indicator that the buyers are now starting to take control. So because this is the first indicator that, okay, now the buyers were starting to take control, this exact level is in this case gonna be the same level that's supposed to trigger you to say, okay, now I'm starting to follow the sellers or I'm starting to look for selling opportunities. So meaning it is not a good thing for you to start selling here ne? It's not a good thing for you to start selling here because you didn't follow all the rules that have to be followed before you open a selling position. Firstly, the market hasn't given new lower lows yet if you sell here, but however, we've received a lower low here and where here, and we haven't received a new high which is lower than the previous one. We have to receive a high which is a little bit lower than that one, and then there will be a better confirmation again to say, okay, now it's likely that the market is going to go down. And then before we do that, this low again has to be broken, and then the pattern is going to be complete. You're going to start selling all the way below this area, because even if this low is broken, it's like the price is going to bounce in this level, because it's one of the important levels which indicated the beginning of buyer strength. So what I'm trying to point out here is that when you want to get breakouts, continuations, and good entry opportunities, your analysis shouldn't begin with trends, but your analysis should begin with key levels. You should be observing the highs, should be observing the lows, not just every high, because if you're gonna be observing every high, it will be a bunch of horizontal levels. You should only observe those which are key, those which are clearly visible, and then you should take your analysis from there. Because if you have the key levels established, at least you know the territories that, okay, this is the buyer's territory, this is the seller's territory, and then in that way it'll be easy for you to get little good little better opportunities. So let me just leave it here, guys, without wasting your time. Thank you for watching this video.